Good morning, everyone. This is Ryan Nettner with your Wednesday, October 16th morning commentary. As we always do on Wednesday mornings, let's take our first quick look at the maps. The first map we're going to see here is the 1 to 5 day map. There is a little bit of rain for the eastern Dakotas here, but if you look across nationwide, this is still a much improved forecast from what we've seen recently. It does look like there are quite a few areas who will be able to make progress here in the 1 to 5 day. Flipping over to 6 to 10 day, we do see on the map there's more rain. We will say that through the heart of the Midwest, there was more rain on this map earlier in the week than there is now. So now we're just looking at moderate rains, maybe a slight delay. And again, except for the eastern Dakotas, which again get hit with some heavy rains. But for the most part, the 10-day forecast has just moderate rains. And we'll just mention, we don't have a map for it, but we'll mention the 11 to 15-day map clears off again. So as a whole, on the 15-day outlook, not a bad forecast here for harvest. Let's flip over and look at some of the grain charts. Let's start with the December corn chart. What I want to point out here is that left big bar, which was the USDA report where they lowered demand, we know demand has been a problem. They recognized that and lowered demand significantly on the report, which was unexpected and moved this December corn market quite a bit lower. Then we see on the bar right next to that the China trade news from Friday. We see that not only did we gain back everything, but we gained back all the losses on that Thursday report and then some. But what we want to point out is that the USDA downwards bar was from fact. Our demand is running poor. Friday's bounce 17.5 cents in corn was from hope that China will buy ethanol. We could say that maybe corn, but it's more likely that trades are anticipating China will buy ethanol. So if we're seeing corn drift back again a little bit farther today, maybe just giving back a little bit of the support because maybe we bounced a little bit too actively on big hopes of China buying ethanol. Now let's flip over to the November bean chart. This chart looks much more healthy, but of course we do expect regular Chinese purchases of beans, even if they are slower than expected. Just want to point out two quick levels. 6-month highs in November beans are at 9.48. So that's we got pretty close to that here just a couple days ago. The uptrend line is down there quite a ways at 907 3/4. That would be the line where you say even if we pull back to that, we're still in a healthy uptrend. Let's flip over to one more chart here. Let's go to the December cattle chart. Looking a little bit like the bean chart, actually. We had one heck of a rally. In fact, $15.25 in the December futures with no corrections. That gets us thinking that on that large of a move, even if you see a $3 or $4 correction in the futures, it could just be a technical correction. So we have to factor that in. If we see this market stumble here, it can handle a $3 to $4 stumble and still look healthy. And we'll point out the 6-month highs in December cattle at 114.92.5. That'll be the first major resistance this market has run into on this entire $15.25 rally. We're still waiting for cash bids. The national show list this week is down 5,100. Of course, that would imply $1, maybe $2 higher cash rate. Given the streak we're on, you could say maybe $2. So we'll see what we get for bids. Don't have any yet. We will mention that last week's average cash trade, to base everything off of, was 108.96. So we'll call it 109. What traders are most likely looking for this week is to hear Packers start with a 109 bid.